Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, since the US Fed early Thursday morning announcement in Sydney around 6 o'clock, the 6:30 statement was somewhat dovish. Yesterday, the Federal Reserve kept its key interest rates unchanged and signalled it could leave interest rates alone in the coming months, given that the economic pressures and the mild inflation. Jerome Powell gave his strongest statement as of yet and did say that the bank was looking at the case of rising interest rates has become somewhat weaker. If you look at the technical implications, we are stalling a little bit as the market gets close towards that 73, 20, 40 resistance. It is ascertained that the market should reject from there if challenged, and I do expect to see the market pull back towards the support level around 72.45. It is assessed a break from there would see further weakness and look down towards 71.65 to 75. Still to come though, we do have the non-farm pay reports. That's out at 12:30 Saturday morning AM. But it would seem that the dollar index did manage to recover. There was a story overnight that Italy has officially slipped into a recession and Europe as a whole is essentially at economic standstill, which gave the euro a bit of a concern after it challenged the top side above 115 and did reject 115.15. I do view any challenges above 115 handled as a potential sell zone between figure to 80, 90 area, and therefore could see further weakness. But keep an eye on these technicals, because I do believe the euro is coming to a bit of a spot here, and from the rejection could see further weakness. But do be a little bit cautious, as I mentioned. Tonight is the US monthly jobs report, and the non-farm payrolls could bring sudden unexpectancy if the market finds the numbers not as forecast. Support at this stage is at 114.35, which was challenged overnight and weakened. My view on dollar yen got to its target overnight of 108.45.55 after posting a low of 108.49. It is assessed from the rebound that we're not quite out of the woods yet and therefore could see one more test to this downside. But I am still a buyer. I'm not going to turn the view as yet and could see a rebound back towards the region of 109 to 110. Sterling broke down, and as you can see, we've got a gravestone doji, which gives a little bit of concern, and we could see a challenge of that support level of 130.2040. Overnight, but though, the market did spike to a high of 131.59. Now, from the rejection, a break of 130.20 could see further weakness down towards 128.40.60, which I do, at this point in time, favour, because the technical implications from the MACD is not as strong as we've recently seen in this up channel, and therefore could see further weakness in the pound. It would seem that the gold is showing a little bit of a pause here at the moment after the resistance at 1,324 to 26 capped. That was the objective. We are overbought, so I do expect to see a pullback. Only in the short term though. I'm still a buyer off around 1,310, as I do expect to see further gold interest and safe haven risk, and therefore see a rally up towards a target around 1,350. And wrapping up with oil, well, the market still is holding to the challenge of $55 a barrel, but we did get a brief challenge there overnight and was rejected after posting a high of 55.41. From the rejection though, dips should be buy towards 53.60 to 52.90. As long as we don't go beneath this neckline, which is around 52 still keeps the upside challenge in favour. So that wraps up today. As I mentioned, do keep an eye out for the non-farm payrolls at 12:30 Saturday morning or tonight around midnight, and therefore keep an eye on your positions to your risk management. So that wraps up for now. I hope you enjoyed the day and a wonderful start to the new weekend.